Hello, welcome to the European Open Briefing for Tuesday, June the 13th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So the focus now is moving on to the Fed or FOMC meeting that starts later today in the US. We're seeing the dollar rather steady. And this comes despite the fact that we had a second day of a big sell-off in technology stocks in the US yesterday. It follows sharp falls on Friday, and this had weighed on the dollar. It's still holding the dollar back somewhat, and despite the fact that we are expected to see a rate increase in the US tomorrow when the Fed concludes its meeting. The pound is doing a little bit better today. Yesterday it had come under pressure due to the political uncertainty following the election shock in the UK last week. Theresa May, the UK Prime Minister, held a meeting yesterday with Conservative MPs where she managed to, at least for the time being, to unite the party behind her. In other movers this morning, the Canadian dollar is one of the big gainers. It comes after the Bank of Canada's deputy governor yesterday suggested that Canada's central bank could be raising rates sooner than expected. So we saw the Loonie jumping higher significantly against its US counterpart yesterday. And this has also helped the Australian and New Zealand dollars to gain further this morning. But let's begin with the dollar-yen pair. We can see the dollar is kind of struggling to hold on to the 110 level against the yen. And this muted response is mainly because, on the one hand, we do have a Fed rate hike expected tomorrow. On the other hand, we're seeing concerns that US stocks may be overvalued, particularly technology stocks. That's somewhat weighing on the currency. But the main effect, though, is basically cautiousness ahead of the Fed's announcement tomorrow, where although we are expected to see a quarter basis point increase in the Fed funds rate, what's going to be of more interest is what the Fed will be signaling for future rate hikes, particularly whether we're going to see a third rate hike or not this year, and also about reducing its massive balance sheet. Which that could have an impact on treasury yields, which in turn would have an impact on the US dollar. We also saw we had an announcement by the U.S. Treasury Department yesterday. They announced quite significant reforms to the financial sector that would ease the regulatory burden on banks and other financial institutions, and much of that could be approved, given the fact that a lot of it could be done through executive orders rather than through Congress. But we didn't see too much of a reaction in the currency markets to that. Moving on to sterling now, we can see that yesterday the pound gave up its early rebound after the US election, after the UK election shock. It fell back below the 1.27 level to around 1.2650. It's a little bit firmer this morning. We are expected to see a deal being reached later today between the Conservative Party and the DUP Party for some sort of an arrangement where the DUP would back the Conservatives, giving them the majority they need on key votes in Parliament. But we're yet to see the details of that agreement and what kind of compromises the Conservative Party would be making towards the DUP Party. The DUP Party is, by the way, a small Northern Irish party that hold 10 seats, and they combined they would give the two parties would have the required majority in the British Parliament. But despite Theresa May yesterday holding a meeting with Conservative MPs where she apologized for the disastrous campaign, there are still some doubts about how long Theresa May will remain Prime Minister. For the time being, though, it looks like there is no appetite within the Conservative Party to hold a fresh challenge to Theresa May's leadership. So that has eased some market concerns. but the focus now is also on the Brexit negotiations. They were due to start next Monday on the 19th. That could be pushed back by a few days. And despite yesterday comments by the UK Brexit Secretary, which actually contributed to that downslide in sterling yesterday, that the government is on course for a hard Brexit, if you like. That, despite those comments, it is looking increasingly unlikely, given the fact that Theresa May doesn't have the authority she needs now. So softer Brexit is more than possible at the moment. Let's have a look at the Canadian dollar now, because we had that big jump in the Loonie in the chart. Of course, this is a USDCAD, so we're seeing a drop there. A drop means an increase for the Loonie. It hit a 2 months high of 1.3273. That was a more than 1% gain on the day. It comes after the deputy governor of the Bank of Canada, Caroline Wilkins, suggested that because of the stronger growth prospects for the Canadian economy, the next move for the Bank of Canada could be a rate increase. She said, as growth continues and ideally broadens further, the Governing Council will be assessing whether all of the considerable monetary policy stimulus presently in place is still required. And the Bank of Canada is due to meet next on the July the 12th. The July the 12th might be too early for a rate increase, but we might, even if there's no rate increase, it looks like we will certainly see a more hawkish tone at the next policy meeting. And the Loonie also boosted other commodity currencies such as the Aussie and the Kiwi. We also had NAB business confidence data out of Australia this morning. Both the business confidence and business conditions index fell, but they remained above the long run average. But within the survey, we also saw the capacity utilization rate increase, and that points to less slack in the Australian economy, and that would be a relief given the recent growth fears we had for the Australian economy. We already saw first quarter growth actually came in slightly better than expected, and now following this business confidence data, we are seeing slightly better outlook for the Australian economy. So the Aussie came close to beating last week's 6-week high of 0.7566 against the US dollar. The Kiwi has been doing even better. We can see that big rally since mid-May. It hit another 3.5 months high this morning of 0.7227. We've got current account numbers coming up tomorrow, and GDP data for New Zealand on Thursday. And the GDP numbers will probably confirm the strengthening outlook for the New Zealand economy. Quick look before we go at commodities such as gold and oil. Gold is rather flat this past a few days. It's generally been drifting lower. The FOMC decision, where we expecting a rate hike, is somewhat weighing on gold prices. Oil is doing a bit better. We had some comments from Saudi officials yesterday that said that they are making cuts to their Asian customers, so that did prop up oil prices a little bit. We saw US crude rising back above $46, and Brent crude briefly topped $49 a barrel. And looking at today's economic calendar, we can see the Aussie data there. We've got UK inflation data coming up shortly, as well as the ZEW Economic Sentiment Index out of Germany. In the US session, the only major data will be producer prices. That's it from me. Thank you very much for watching, and have a great day.